All right. So here we are going to be practice completing the adjusted trial balance. So we did our adjustments completely on Monday and we finished it off on Tuesday. So today, let's go ahead and complete the adjusted trial balance. So once again, shortcut to doing this, right? Instead of having to type in every single account, right? We can simply, all right, we have to delete this first. And what we're going to do is we're going to actually create a copy of this one. So move or make a copy. Okay. And we're going to click on make a copy. And I'm going to place it right here in between my income statement. And I'm going to rename it, right, to the adjusted trial balance. Okay. And I'm also going to make a few minor changes, such as the title here, right? Just so then it works that way, okay? So exactly like how we've created our adjusted trial, unadjusted trial balance, we're going to be utilizing our general ledger. The ledger must come first before completing any trial balance. So now that I finished off, right, if you guys take a look, I finished off my journal, right, put a black bar there just to remind me that now I need to complete my adjustments. And all of my information should be updated to the most recent amounts in my ledger. So let's just go ahead and just skim through it just to ensure that we paid off of our people, right? Did we pay off our people? I have to do petty cash, okay. All right, so right, we're not writing anything else, okay, we're just taking a look at this. So let's go back to our financial statements and let's go ahead and update each account. Now, again, some of these formulas or equal sums must, have to be adjusted because we're re-adding a few things. So once again, we're going to go ahead and take a look at each and every single account and find the account balance and go from there. Okay? So I'm shrinking this just a bit so we can have a little more room. All right, first things first, my bank account. Okay, for my checking, what is my total amount in my checking account? Is this okay for everyone to see? I feel like it's a little too small. There you go.
Yep.
Okay, so first things first, what's my total ending balance in my checking account?
139,258.13.
139,258.13. Okay, so that automatically, right? Because I had a formula here already, so it automatically updated that. So let's see.
We had a very good July.
Say that again.
So we had a very good July compared to June.
Oh yes. Oh yes. Oh yes. If you guys are curious about the entire scenario and how we got this amount here, I can post the entire scenario onto the Google Classroom if you're just curious. But, for most cases, I just did this for an example. We've hired another person. We revamped our menu, right? We offer cold drinks now. So that's where most of our stuff is generated. But we did have heavily cost. So...
well, that makes sense in the summer.
yes, it is, yes. All right. What about my petty cash? Is it the same?
No, it's zero. It's zeroed them out.
Yeah, it's gonna be zero.
Yeah, we zeroed it out because we decided to, instead of having petty cash around, we decided to apply for the second business credit card. So if you have one already, you should be able to get a second one, especially for businesses, because you can have multiple cards all linking to one account. Okay. So I don't mean like actually applying for a second credit card, like a separate credit card line account. This is like getting a second card for the same account. Okay, so in this case, I plan to just have that as in replace of the petty cash fund. So boom, that means petty cash should be 0. What about my cash in my register? Yeah, it's 800 now. Yes, because if we're increasing our sales, we need to increase the cash in our register. Okay. All right, what about my accounts receivable? 24, 66, 47. Okay, so we decreased our account there. And then what about my allowance for doubtful accounts?
123.32 on credit.
32, yes. So in this one, I've already attached the credit to, or the allowance for doubtful accounts to go against the accounts receivable. So I just added that number in, or the new number, and it automatically updated my accounts receivable. Okay. So let's see what else happened next. Okay, so do we have any business supplies? Yes, we do. So what about our medium coffee cups?
95.05.
Yes, we used a lot. 95.05. So then we also have medium plastic cups, right, for our cold coffees. So 53.05. Okay. What about my large coffee cups?
223.75.
Yep. And then my large plastic cups. Okay. What about my sugar?
33.12.
33.12. Ooh. Okay. What about my coffee creamer? 277.61. And then I also, right, this is something new. We bought heavy cream. How much is left now?
49.75.
49.75. And then lastly, we also bought some whipped cream. So how much is left? 64. 64.50. Okay. So this should be automatically calculating all of these totals. So that is good to go. Okay. Now we're introduced to our office supplies, right? How much office supplies do we still have left? We only have 125. Okay. All right then. So next, we have here is our furniture. I'm sorry, our inventory. Sorry, that looks weird. The 125. That should be more than that. But anyways, okay, let's go back to inventory. Okay, so what happened to my inventory? Okay, so let's look at our regular coffee. What's my ending balance in my regular coffee? 830.99. Okay. What about my supreme coffee?
1060.85.
1060.85. No changes there? Okay, 1060.85, okay. And then lastly, right, what about my ceramic coffee mugs? This should have changed.
Yep, that's 511.99.
Let me take a quick second look at something real quick. Okay, so then now we're gonna go to our furniture now. All right, let's see what happened here, right? We had to do a second month of depreciation. So, first things first is going to be my bistro tables and chairs, okay? That should stay the same, right? The 665.0508. However, what's the accumulated depreciation on that?
157.26.
157.26. Okay, and that should automatically update this as well because this is from the previous one, right? I've already made the you add all your assets and then you subtract all of your credits. Okay, so that one should be good to go. All right, so now we're going to go down below. We see our counter. That should stay the same, but my accumulated depreciation for my counter is now
28.42.
28.42. Okay. Let me try to squeeze this in here. Okay. All right. Next we have here is going to be our desk set. So that should have stayed the same, but the accumulated depreciation on the desk is now 1568. Okay. And then last but not least, we have our display shelves that should stay the same, right? Historical cost. However, the depreciation is now
1374.
1374. Okay. Now we're going to go ahead and move along into office equipment. So once again, office equipment, we have our computer, right? Still the same. But our accumulated depreciation on our computer is now 120.28. Okay. And then this one should also be updated as well, right? I've, added all my assets and I've also credited all my accounts. All right. So next we have here is going to be our printer. Printer should have stayed the same, but the accumulated depreciation of my printer is now 24.84. Okay. And then same thing with my register, except my accumulated depreciation now for my register is
42.58.
42.58. Okay. And last, we also got a phone for the company, right? Okay, so we bought a phone. Okay, so here I have it on here, but I don't have accumulated depreciation, so I need to add that account in there. Okay. Accum depreciation phone. Okay, and this I'm gonna have to add. I am gonna have to add that extra piece in here. So here I have that I added my phone in there. I also need to subtract out the accumulated depreciation right here. Okay, so how much was my accumulated depreciation for the phone?
73.
It was for 1273. Okay, which should now automatically update this. Okay. All right, let's see what else is there. So we have our equipment, right? First things first, we have our coffee brewers, right? What is our depreciation on the coffee brewers?
192.40.
192.40. So brewers. 192.40. Okay. Same thing here, right? The formula is going to be like that. Okay. Next is the coffee grinder. Okay, that should stay the same, but the accumulated depreciation for the grinder is
138.18.
Okay. So now let's notice this here. We have three brand new assets that we purchased. We purchased blenders, ice makers, and we even bought a refrigerator. So each and every single one of them is going to have a accumulated depreciation. So let's go ahead and insert all of those. Okay, EQ depreciation blender, AQ depreciation ice maker, and we also have AQ depreciation fridge. So of course we need to modify our formula, right? So as you could see, the last thing that we added here was C32. Okay, we're also going to subtract out this right here. We're gonna subtract out this right here. And we're also gonna subtract out this right here. Okay. So let's go ahead and take a look at our accumulated depreciation. So the first one I have here is going to be for my blenders. Okay, so what's my accumulated depreciation for my blenders?
6.49.
Yep, 649. Okay. Then we have our ice maker for 1432.41. So there it is. What is my accumulated depreciation on my blender? Sorry, ice maker. $17.05. Okay. And then last but not least, we bought a refrigerator, right? So what's the accumulated depreciation on my refrigerator? 2274. Okay. All right. Let me see. Did that update everything? It should have. Okay. So now we have is vehicles, right? We have our car, our truck for the 32,208.90. So what is my accumulated depreciation on my truck?
639.
I just realized this is in the wrong account. It's supposed to be on the credit side. Okay, there you go. 6,730. 6,7,639. Okay. It's on the credit side. So there it is. 6, 7, and this has also been updated as well. Okay.
Missing 3.
I'm missing 3.
Yeah, on the depreciation, I think there's an extra decimal point, and that's where the value's not.
Okay, hold on.
Column E.
All right, and it's missing, so 67639. There you go. Thank you. All right. Good. Let's see. What about prepaid accounts? What is my prepaid account now?
Down to 715834.
Yes, we bought some insurance, but we also had to adjust for our rent and our business insurance. Okay. What about my deposits?
No change.
No change there. And then what about my goodwill? Right, the amortization for goodwill should have changed. Oh my gosh. No, there should be something here. I should have.
As for July.
Right. So let me see my journal here. I should have recorded it. Let's see. Yep, amortization expense for goodwill should have been there for 1167. So therefore, okay, maybe I didn't save it.
Total of 2330.
So it should be now 23. Oh, wrong sheet. So now it should be 2334. Okay. So there we completed all of our assets. Okay. Now we're going to go ahead and move along to my liabilities. So liabilities, right? Here, in this scenario, we try to agree to pay off everything that we owe for accounts payable. But now that we had to accrue our bills and stuff, how much is our accounts payable now?
396. Yeah, 16.
Yeah. 939616. 939616. 639616. Okay. What about my Visa payable?
Gone to 0.
It's 0 because we converted that into a bill, right? We received the statement and we zeroed out our total credit cards because we are going to pay it off. Okay. What about our notes payable? It has stayed the same. Yes. We didn't make any payment towards our notes payable for our phone. So we're going to go ahead and continue on for it. So next is payroll liabilities. So do we have an account balance for our salaries and wages payable?
And 46.
1046, right? We had to accrue for both Irene and Tim. Okay. What else did we complete here? We also had to do commissions for Albert. So how much do we owe him? Okay. 166.16. My my FITW, did that change?
No.
No. So all of these, right? We didn't calculate our paychecks yet, so these should actually all stay the same. Okay. All the way down to sales tax. Good. So city payable, right? We didn't have any of those. Electrical payable, water payable, no unearned revenue, and here we are, sales tax. Right? Did my sales tax change?
No.
No, right? We already reached the end of our sales on the last day, so that should stay the same. Okay. What about I have another new account here for interest payable. All right. So let me have to insert that in here between sales tax and loans payable. Okay, so all right. Remember, I had to accrue for the interest on my credit card. I also had to accrue the interest on the truck loan. So how much is my total interest payable?
145.78.
145.78. So here we are. So this is going to equal this, and this is 145.78. Okay. Our truck loan, did it change? Yes, it did because we received a bill, right? We're gonna pay for it. I think it was 644. Yes. So I got 27,66644 for my truck loan, and I put in the wrong place. 27,12344. There you go. Okay, so there we are. That is it. Nothing left here for my liabilities. So here we are, my equity. So if you notice this, we went from sole proprietor to a partnership. All right, somewhere in the scenario, we Bob agreed to go into a limited liability partnership, right? Because Bob's going to be the general partner while the other partner is just a mere investor. So here we are. I closed out all of those. So all we have left is just our partner's investment. Or so we have our partner's equity or partnership equity, right? Did that change?
No.
No. We have our partner's investment for 15,000. Did that change?
No.
And last but not least, we have our partner's withdrawal. Did that change?
No.
No. We won't change it until the very end when we complete our closing out the books, but we're not going to do that for this class. We're just going to go through the financial statements and that's it. All right, so these should not have changed. They only update the actual statement of equity. So now we got to go to revenues. Okay, so for sure all of these should not have changed because we haven't closed them out. But let's go ahead and double confirm our numbers just so that we make sure that our numbers are perfect. Okay. So first things first is, what about our sales for regular coffee? Did that change?
No.
Okay, no. Sales for Supreme Coffee? No. And then so on and so forth. Ceramic coffee mugs should have changed. Actually, no, never mind. Did we sell? Okay, so ceramic coffee mugs. No, those are all the same. So again, all of your revenues should stay the same because we already finished up all of these in our unadjusted trial balance, right? Well, we had to record everything. So these should all be the same. Okay. So I'm just going to double check. So if all my sales are the same, my returns, I didn't have any returns. What about my discounts? Did that stay the same? Yes, it did. Okay. Same thing with my delivery income. It should be reflecting at 360. Okay. So my revenues should also the same. So let's go ahead and go to our cost of goods sold because we definitely made some adjustments here. So first things first is, what about my cost of goods sold for my regular coffee?
It's the same.
It's the same, right? No changes there. Same thing to my Supreme Coffee, right? No changes there, right? It should be still 57.45.50. Okay. Now, what has changed? We have cost of goods sold for our coffee mugs. So, as you can see, it's already in my trial balance. So, what is my total balance for my cost of goods sold for the coffee mugs? 84873. Okay, there you go. It updated my formula. Okay. Now we have cost of material. Okay. So, once again, we have way more costs of materials than these ones here. So, I'm going to go ahead and add those extra 4 in there because we have medium plastic cups, we have large plastic cups, we have heavy cream, and we have whipping cream. So, I'm going to go ahead and insert all of those. Okay, so here we should have cost of materials, medium cups. We should have cost of material for the medium plastic cups. All right, I'm just going to do abbreviations for short. We also have cost of materials for the large cups, and we also have it for the large plastic cups. All right, we have it for the sugar. I just realized I put it in the wrong spot. Okay, we have it for the for the sugar, the creamer. We also bought heavy whipping cream, and we also bought whipped cream. Okay. So let's go ahead and go through all of those costs. Okay, we have to fix our formula now because now we have more cost of materials to consider. Okay. So first things first, what was the cost of materials for my large cups? I'm sorry, for my medium regular cups.
$21.88.
$321.88. Okay. What about my medium plastic cups? $650.58. Okay. What about my large cups? $480.08. And then what about my plastic large cups?
$904.
$904. What about my sugar?
$132.40.
$132.48. And what about my creamer?
$1126.77.
And my heavy whipping, my heavy cream.
$199.
And last but not least, my whipped cream. $258. Right, there you go. I have all my numbers summed up for my cost of materials. Okay. Good. Okay. So next is going to be my operating expenses. So I have a few changes here. All right, let's start with the top one. Any advertising expense? Not this month, right? We didn't incur any. Okay. What about my bank fees?
Yes.
Right, $50. Okay. What about my business expenses? Right, that should stay the same. Okay. So now we have next is my freight expense. Right, it's 0 because we did our inventory conversion, right? So we have nothing in there. What about my insurance expense?
I went up to $395.83.
$395.83, right? Because we had to accrue for the month of July insurance expense. Okay? And we also bought car insurance, so there you go. Okay? What about interest expense?
200.
Okay, let's see. Interest expense, here we are, is now to 200. Hold on. Interest expense. All right. Hold on. Interest expense. don't. Okay, so there's my. Okay, what about my Visa payroll? Wait, hold on. Insurance expense. Okay, this should be not. There should be nothing here. Because I already put it up here, right? My interest expense for my car is already 200 up there. So sorry, excuse me, that I gotta clear that out. So nothing in my interest expense account, but I should have some interest expense for my Visa Gold. And what is that?
102.96.
102.96, right? We had to incur our July interest expense that we accumulated. What about the truck loan interest expense?
144.16.
Yes, right? 144.16. Okay. Any labor expense? None so far, right? We didn't contract anybody to do any subcontracting. We didn't even hire anybody for temporary work labor. So, what is next? License and permit expense. That should still be the same. Okay. It should still reflect that $100. Okay. We didn't sell any of our assets, so no loss on disposal of assets. Okay. So what's after that? We have office supplies expense.
142.16.
14216. Okay. And then payroll expense. So yes, we had to accrue payroll for Irene and Tim for salaries and wages expense. So what is my new balance now? 3986. Okay. We also had to accrue for the commissions expense for Albert. So how much is my commissions expense?
503.55.
503.55. Okay. And of course, we didn't pay anybody, so our tax expense should be okay. Should be the same. All right. And then next we have is purchase expense. So, what account balance is in my purchase expense?
0.
Should be 0, including my purchase returns. Any purchase discounts, they're all going to be 0. Okay. All right, next is rent expense. How much is my rent expense? That is 1,500, right? We had to accrue the interest expense for the month of July. Okay. Or we need to adjust it because we already paid in advance. And then what do we have here? We have our travel expenses. Did that change?
No.
No, that should stay the same. All right. Then we have our utilities expense. So we had to calculate our utilities because we received a bill for our utilities that we used for the month of July. So let's go through one at a time. What is my city expense?
50.
50. What is my electricity expense?
800.
Okay. What is my I think this is gas. What's my gas expense?
50.
Okay. I've also received my telephone bill. How much is that now?
309 for B,
Mm-hmm.
304.93.
Mm-hmm. And then we also got our water bill. How much is my water bill? Or expense? And 100. Okay. Bad debt expense. What is my bad debt expense? 907.27. What is my depreciation? And lastly, what is my amortization expense? Okay, so I did not fill this one in. Okay, so 731. Okay, that should be a debit for 1167. Okay. So 1167. So let's see. Did we match? Oh, okay. I don't know where to find that $9. But I'm off by $9.
It's in the cost of materials of the sugar. I think we transposed. It should be 123.
Okay, hold on. Cost of materials for sugar. Cost of materials for sugar. Okay, what was it?
I think it should be 132.48.
Let's see. Yes, excellent. Good job. So, yeah, we all matched. So that means we're completely done with our adjusted trial balance. Okay? So far, so good. Good job, everybody. Okay. Computing the adjusted trial balance should be fairly easy. Once again, all you need to know is as long as you have your work correctly done from transferring from your journal to your ledger, all you need to know is that as long as you have your account balances is all you need. Okay, so I'm going to go ahead and spend the next 15 minutes, since it's only 9:30, and we're going to go over the financial statement. So once again, you'll be pulling information directly from this worksheet. Okay, whoa, there you go. So again, most, if not all, your information is going to come directly from your adjusted trial balance, right? We made sure that every single main account, right? We've created it so then when we complete our financial statements, we don't have to clutter it with so many accounts. We just utilize only the main account. So let's get started with our first one, which is the income statement. All right, if you guys remember what the income statement does, okay? Okay, let's go over it. Here's the income statement. What's the first thing I need to recognize? Under my operating income. Sales, good. So I'm going to go to my adjusted trial balance to locate my sales. Okay, so it should be here, sales, okay? And how much is my total sales?
So 143, 169.28.
There you go, 143, 169.28. All right. What else do I need to include in my operating income?
Delivery income.
No, that's going to be considered other income.
Other income, right.
Because that's not our main core of our business. Okay. What else should be included under operating income? Okay. So if I have sales, Do I have any contra accounts to sales?
Returns and allowances. No
We-
balance there.
No balance there.
Accounts?
We do have, good. We're going to include our sales discounts because that's going to take away from our sales, right? It's still going to be considered the section for sales. Okay? And this one's going to be a negative number because it decreases the amount of sales that you have. And in this case, I have a total of sales discount for $787.20. So in this case, since that's the only thing I have, what is my total sales going to be?
$142, 382.08.
Mm-hmm. Good. All right. All right. So in order to find our gross profit, what do we need to take away from my operating sales?
Cost of goods sold.
Correct. We're going to take our cost of goods sold and also our cost of material, right? Because when we sold our coffee, we also sold the material as well. So we're going to locate my expenses. Here we are, cost of goods sold and also cost of material. Okay? So these balances are going to subtract away from our sales. So what was my cost of goods sold?
11,647.92.
Good. And lastly, what is my cost of material?
4,068.83 cents.
So therefore, let's go ahead and solve for our gross profit. So we're going to take my sales, subtract out the cost of goods sold, and subtract out the cost of material. So we should get a total gross profit of
26, 665.27.
perfect. Okay, good. So now we have to go through all of our operating expenses. So starting from the first one, right? I'm going to have to format this real quick. Okay, so our first operating expense, what was it?
Advertising expense.
Do we have an account balance there?
0.
No, so you can disregard it. There's no balance there. So what's our next one then?
Bank fees.
Bank fees, good. So there, I'm gonna do it on the left side so I can create a sum, okay? So how much was my bank fees for?
$50.
Okay. All right, so then what is next? What account is next?
Business expense,
Business expense, okay, for how much?
50402.
Mm-hmm,
Yeah.
good, okay. What is next?
Freight,
Freight,
fuel,
that has nothing.
Insurance expense.
insurance expense,
Insurance expense, yes. Okay, for how much?
39583.
Okay. All right, what else is there? Oh, hold on.
Interest expense.
We have interest expense. Okay. For how much?
247.12.
Okay. Okay, let's see. What else do we have on here?
License and permit expense.
Okay, good. License and permit expense for 100. So license and permit expense for 100. Okay. All right. What else is next?
Office supplies expense.
Office supplies expense. Okay. For how much?
142.16.
142.16. Then we also have
Payroll expense.
payroll expense. Okay. For how much?
50, 29.
50. Good. What else do we have?
Rent expense.
Rent expense. Okay. For how much? Oh, yeah, undo that. Okay, rent expense for 1,500. Okay. What else do we have?
Travel expense.
We have travel expenses. Yes, we do. For how much?
235.
235. And then we also have
Utilities.
utilities expense for
1304.93.
1304.93. And then we have
Bad debt.
bad debt. So I'm just gonna go ahead and copy just a trial balance. Yes, the rest of them. So we got bad debt expense. We also have depreciation, and lastly amortization. Okay, and each one. So what was my bad debt expense?
97.
907. Yep.
97.
Okay. My depreciation. And my amortization. Okay, so there you go. That's all of my operating expenses. So what I'm going to do is I'm going to actually delete all this so then I can tidy up my workspace here. Okay, so then what is my total, what is going to be my total operating expenses? What's my total operating expenses?
11,321.12.
11,321.12. Good. All right, and last but not least, we have our other income, which is going to be what was my other income?
Delivery.
Delivery.
Mm-hmm. So here we're gonna put that there. I'm gonna align that to the left. All right, and that should increase your income by how much? Okay, 360. So let's go ahead and let's go ahead and solve for our net profit slash net loss. So you need to take your gross profit, okay? You're going to subtract out your operating expenses and you're going to add your delivery income to get a grand total net profit of
115,704.15.
115,704.15 is going to be our profits. Yay. Okay. So now we're going to move on to our equity. Okay. So what was our equity in the beginning of 7-1? Okay. So in this case, you can go to any other sheet on here to find out what was your beginning balance. But if you guys remember from your previous Coffee Cafe for the previous month, it should be that 40,000. It should be that 40,000 and I think it's like 128 or something like that. Okay, so I'm gonna go ahead and locate that. So here, equity should be, oh, there it is, 47,1836. That should have been your beginning balance that you started out with. Okay. Things that will increase it, right? If you remember the scenario, it does say that both partners agree to reinvest into the company, right? Because it's in its beginning stages. We don't know what's coming up in the future. So they both agreed instead of pocketing the profits, right? When you go into a partnership, right? He gets 50% of the profits. Okay? And then you guys can both make an executive decision to either reinvest your money or take it out. So in this case, both partners are going to invest their money back into the company. So the net income, which is your amount of profits, is going to be all transferred into the new income. Okay. Other contributing factors is that did anybody make any capital contributions, or in this case, I have a new account called partner investment. Okay. Did one of my partners invest? Did a partner invest?
Yes, 15,000.
Yes, they invested 15,000, right? But did also one of my partners take money away? So partners withdraw? Yes, we did. Okay, and they withdrew by $9,000. So again, your total here will be the amount that you're going to increase your equity account by. So you're going to increase your equity by 121,704.15. Okay. So now, what is your total ending balance in your equity?
$162,423.51.
Perfect. Okay. And that's going to be your new equity. All right. Last but not least, the balance sheet. We're going to complete this real quick. So every single asset, every single liability, and we are already given our total equity, right? Our new equity, which we just solved in our equity statement of equity, to be 2,4,2,3,5,1. Okay, so let's go ahead and solve for my total assets. Okay, starting with my first asset, which is going to be my bank account. Okay, so my bank account, boom. Okay, how much was my bank account for?
140 of 5,830.
Good. All right, what's my next asset? Accounts receivable for what balance?
2,243.
Good. All right, what's my next asset?
Business supply.
Okay, for how much?
87104.
Okay, what's my next asset?
Office supplies for 125.
Office supplies for 125. Good. Okay, what's next after that?
Inventory.
Inventory.
Inventory for how much?
2,483.
Perfect. What's after that?
Furniture,
We got furniture.
8,818.
Good. Okay, let me see what's after that. And then what's after my furniture?
Office equipment.
Okay, for 3,526.53. Okay. What's after that?
Equipment.
Equipment for a total of 12,000. Okay. What's my next asset? How much is my vehicles?
31,325.
Good. We also have prepaid accounts. We have our deposits. And lastly, we should have goodwill. Okay. So again, my prepaid accounts should be the 71. We have our deposits for 17 and our goodwill for 2078 or 76. Okay. Go ahead and now tally up those totals in your total assets. What's your total assets?
221,597.19.
2, 1, what? Say that again?
Yeah, I should check. 221,597.19 is mine. I will check.
Hopefully I didn't do a typo here. Well, actually I didn't. I just referenced everything, so.
Yeah, I get the same. The 2133946.
Okay. Okay. We can always come back to that. Okay. So let's compute our final section, which is our total liabilities. So what was my first liability?
Payable.
Okay. And how much is it outstanding right now?
It's 360.
Mm-hmm. What's my next liability?
Notes payable
Notes payable
for 827.77.
for 827. For 827.77. Okay. What's my next liability here?
Payroll liabilities for 25.87.
Payroll liabilities for the 27 or 25, excuse me. What else liabilities do I still have? Okay. So I should have three more left. I should have sales tax. I should also have interest payable, and I should have my loans. Okay. So once again, my sales tax is going to be 13,000. My interest should be 145. And lastly, my my truck loan is outstanding for 27. Good. So add up your total liabilities. Okay, what's my total liabilities?
509.7075.
509.7075. Last but not least, so we got to compute our formula. What is my total liabilities plus my equity? Okay, so what is my total liabilities and equity?
394.26.
Okay, and then I'm gonna just double confirm. I'm gonna pull my total assets down here and compare them to my liabilities, my equity, and are they zeroed?
Yes.
Yes. Success. Our accounting equation holds true. So once again, our total assets equals our total liabilities plus our new equity. Okay? And these are the three financial statements I'm going to be testing you guys on for the final exam. So once again, how did we compute the income statement? Straightforward. We solved for all of our sales. We countered them against our cost of goods sold. Then we counter them against all of our operating expenses. And then lastly, if you have other income, then you add it in there. Okay? Then the next one is going to be your equity. Most cases, most businesses, they are going to reinvest into the company. So you're going to go ahead and start with your beginning balance. If you guys are investing your money back, your profits back in there, boom. Anything that is a contributing factor is investments will increase your company, withdrawals will decrease your company, and therefore you should be able to solve for your equity. And then, of course, with this new equity, you plug it into your balance sheet, and you're going to solve for your total liabilities as well as your total assets to solve for the equation. And in this case, we were successful. Any questions in regards to this entire process right here? So again, I will up if you would like. If you would like, I can post the second month's what do you call it? Scenario. If you guys are curious and want to try to do this for practice purposes, you may do so. Okay. But for most cases, I just want you to focus on the stuff that you're given, right? And just computing the financial statements. Okay. So, does anybody have any questions in regards to anything that we learned today?
No questions.
Okay. So again, I will post this on the Google Classroom so you guys have extra